Good afternoon, everybody. Today I'm chatting with Alex Klenman from TISDALE Energy. In this interview, we discuss the uranium market and the potential of large suppliers coming online and whether or not that's realistically going to impact the uranium market. And we also get into TISDALE Energy. Alex tells us about the company, what their exploration plans are, and what investors can expect over the remainder of 2024. All right, everybody, enjoy the interview. Alex, thanks for joining us today.
I appreciate it, Steve. Thank you for having me.
So, Alex, I recall actually talking to you maybe 5 or 6 years ago, before I was working with companies. I recall actually just randomly calling you about a uranium company you were working for at that time. I think that they were called Azincourt. And you took the time to chat with me about your uranium thesis back then. This might have been more than 5 years ago. This might have been like 7 years ago. As a retail investor, I always appreciate when CEOs will just take the time to chat, and I appreciated that. But what I found particularly interesting about that story and worth bringing up is that if we go 7 years ago to today, you believed in uranium back then. And here we are, the price of uranium's up, I don't know, 400% or something. We still haven't seen that much capital flow into the junior names. We've seen a little, but I don't think as much as we would have expected if you and I were talking about $80, $100 per pound uranium. So maybe you can walk our audience through your uranium thesis and where you think uranium could be heading.
Yeah, no, it's great that you reminded me. I mean, we have spoken before, which is really interesting. And Azincourt is still around, and I'm still involved with Azincourt. It's a perfect example of what happens. So let's back this up a bit. In 2017, 2018, we were dealing with $20 spot in that neighborhood. There was no capital. There was no interest. Still in the throes of the bear market that was initiated essentially by Fukushima. The disaster in Fukushima. So we were still fighting our way through it. But what we did see then, and what became more apparent heading, say, to 2019, 2020, was the supply deficit situation, which is 100% more exasperated today than it even was then. No one could foresee some of the things that are impacting it as today. But we knew supply and demand was in our favor. It always has. It always will be. There's more reliance on nuclear. We could see that happening in 2017, 18, and 19. And things have changed for the better in that regard. More recently, most importantly, the Russian ban in the United States. They've got a source elsewhere. And what's happening in a lot of countries in Africa and Niger, for example, there's some nationalization going on. There's some issues going on with mono and atomic. And so these types of situations are really squeezing the supply, which is, there were two catalysts earlier this year. One was Kazatomprom, the world's largest producer, basically saying they can't meet production estimates in this year or next year, and they won't meet those estimates. And Chemical coming out shortly thereafter and saying they missed estimates in 2023. Despite some positives on their bottom line, the real situation is that production is not what they thought. So we've got the two world's largest producers unable to meet their own estimates. Where is the supply going to come from with a record number of nuclear reactors in the pipeline now that are being built? What's already online today? There just isn't a very favorable scenario for us to be able to meet that demand. So, if there's ever now, having said that, what a bull market is in the commodities is a supply demand situation. Not enough supply to meet the underlying commodity price reflects that. It bumps up, and you have a bull run for however long until maybe that supply is met. The demand is met by that supply. Now, we don't have that situation because we don't have a way for that supply to ramp up in a way that's going to meet the demand. So when does this cool? Now, we've had many false starts. You talked about 2017. Yeah, we had false starts, several of them. Right around 2020, 2021, we started to see a pop. And I think it was August of 2020 or 2021 when spot hit $60 and the equities went nuts. And that was sort of the first leg. And say, well, is it over now? I mean, spot's $82. It looks to sell off today, kind of bounce back in the rated equities. Between 2003 and 2007, spot went from $7 to $120. And there was at least half a dozen moments in that duration where the equities backed off as much as 60%. So this is wholly to be expected. These are consolidations when we have the spot dip like this. Now we're heading into a seasonality situation here. We should see spot bump up here in the fall. So, you know, uranium really is, compared to everything else, it's not lithium, it's not gold. There aren't supplies out there that are going to hit the open market in any great form. And we can drill down on that if you like. But uranium this is a generational opportunity. I hate to use hyperbole, what it is. And it's verified, and it's real, and don't ignore it is the bottom line.
So, Alex, let me give you a little bit of pushback on that,
Yeah.
just in the sense, because this is something that is my concern with uranium. When I think about this idea that there's no big supply coming online, I got to talk about NextGen, which is one of the best discoveries over the last 20 years. And if they end up producing the amount of uranium that they say that they're going to produce on an annual basis, they would be bigger than Kazatomprom is today. I think that they're in their marketing materials, they're saying that they're going to produce 30 million pounds a year of uranium. Do you not see this as a little bit of a concern for uranium bulls in terms of where the price of uranium could be heading over the next 5 to 10 years?
Yeah, we're looking at Rook, right? So their Rook is supposed to be in production within the next 5 years, and we'll see. That's yet to be a fact. But if they were so confident in that Rook production estimate in their mind, why would they go buy 2.5 million pounds from MMCap, which they just did in March at $92 a pound? So they did that as a hedge. The reality is it's a lot tougher to deliver the pounds. Look at Cameco and look at Kazatomprom, which have been doing this regularly for a long time. They can't meet their own production estimates. But as the reliance on nuclear grows, so will the dependence on more uranium. And there's just not a lot of supply coming online. Look, the Athabasca Basin is ground zero. There are 2 mills in the basin. That's it. That's the bottleneck. So even if 100 million pounds were to come online tomorrow, we're no quicker in turning them into pellets to sell than we've got a bottleneck. So let's hope that over 5 years, 6 years, and we're talking 5 years before Rook would be in production. But again, presentations, forward-looking statements does not equal reality sometimes. So we'll see where we are in 5 years when Rook, in fact, if it's producing at that point. But 10 years from now, sure, maybe the demand will be met. But we're going to have to see some very big changes. I mean, there has to be more ability to deliver those pounds to fuel, and particularly in the basin. And with 2 mills, it's not happening in the next couple of years, that's for sure.
Okay, so let's talk about TISDALE, the uranium project that you're working on now. What's the high-level overview for the company?
Yeah, it's really interesting. So I was I'll give you some background. I was a minority partner in the deal since 2019. Late in 2023, there was some fundamental shifts with the partners in the deal. They left. I ended up becoming the lead guy, taking over. And why I stuck around was we had signed an earn-in agreement with Sky Harbor Resources on a 7 million pound deposit. That's a lower grade deposit. It's small by any measure, but it's near surface. It's open in all directions, and the grade looks like it improved, as does the size of this. The characteristics of the deposit are types of deposits are typically found in clusters of pods or strings of pearls, if you will. And so the one deposit on the project, which is about 2.7 million pounds at 0.05%, or 0.556%, pardon me. So half a percentage, half of one. So the grade can kind of creep up and get more economic. Again, we're talking surface to about 200 meters. It's very shallow. Next door to Rio Tinto in a great area. But we are working on the thesis that we were buying 7 million pounds at $2.50 a pound from Sky Harbor, who owns the project. Jordan Trimble, who's the CEO of Sky Harbor, is one of our advisors. So he's working very closely with us. But just to be able to have, ridiculous 3 million market cap with the ability to buy pounds, I think is fundamentally unique. And why I was happy to stay involved with the deal and happy to buy about 1.6 million shares in the open market at an average price of about 15 cents. So I'm wholly invested in the deal. I've almost got 5% of it myself, 4% range. And I'm doing that because I believe in the uranium thesis. I believe where we're going in this space. And I believe that this company, TISDALE, will get a re-rating at some point as we earn our way into this deposit, that the value will be in the ground. I mean, let's say we get $5 a pound credit. Right now, do the math, 31 million shares out, $5 per pound on 7 million pounds. You can see the market cap expand.
At what grade does uranium become economic? Like when I look at the grades that you guys have, respectfully, the first thing that I think went off when our team was sort of doing our research on TISDALE and trying to understand the project was that like it seems kind of low in terms of economics. What grade is economic, and why is it not too low?
Yeah, well, there's a couple ways to look at that. Number one, extraction is dependent on metallurgy and things like that. What is the extraction rate? And what we like is there is a higher grade feeder in the system. The rest of the ground has not been explored at all in any real way. So this 7 million pound low grade deposit is sort of our base anchor. We grow that to 10 million pounds and we can up the grade to closer to 1.1%. We're getting economic. Now, we know there are 10 million pound deposits in the US that are in production at similar, 0.1% grade. So again, I don't know if we don't make additional discovery and expand things and this remains static, if it's ever going to be in production. But what we do know is to have, say, another 4,000 meters, 5,000 meters of drilling, we'll have 10 million pounds, even at a lower grade. That 10 million pound deposit is going to be valuable in the environment that it is. We have a $150 spot. Even small deposits in the basin are going to carry value. Are they going to carry extreme value like some of the big high grade deposits? No. Are they going to carry more value than the 35 cents a pound credit in the ground we're getting right now? That's my bet. Because I could easily see that being $3, $4, $5 a pound. I've heard people say $10. Now I'm not going to bank on that, but it isn't going to be 35 cents a pound. So our job here is to develop that deposit, bring it up, get it to a higher grade, a larger size, and make further discoveries. Steve, there are dozens of pure greenfield explorers out there today who are trading at 3, 4, and 5 times on them. And if they are the 1% that makes the discovery, they're going to be bucking the odds. And even further down that line, if they can replicate that discovery hole 3, 4, 5 dozen times, now they're actually getting somewhere. But they may have 7 million. They may have 10 million. They don't know that. At least we know where we're going to be. We fund our way through this earning and make no discovery and just simply work on the deposit itself. I think any of those explorers out there, if they can delineate 7 or 10 million pounds in the next 5 years, they will be deemed a success. But there's no guarantees with them because we know the odds are fully against that. Where this changes is obviously we're starting with a mineralized system that has a defined deposit, as low grade as it might be. It's there. We have 5 million pounds of thorium, which is also sort of the poor man's cousin of uranium. And perhaps if uranium deficits continue to be prominent, that thorium begins to be becomes more of a development tool for creating nuclear energy. We're going to see that maybe perhaps in the next. But there is, there's ISR technology in the U.S. on these low grade deposits. Maybe this deposit's potential for ISR. We don't know. We'll be working on things like that over the next couple of years.
What's the capital raising environment like right now for uranium juniors? I know like it felt like it was getting pretty hot there a little while back. I know going to the Red Cloud Uranium Conference, everybody was super excited and happy. And I feel like with uranium pulling back a little bit into the 80s here, the excitement isn't quite as strong. But from your experience, what's sort of the sentiment right now with the investor base you're talking to?
The sentiment is on a scale of 1 to 10, it's like 1.5. And so what happens with sentiment is, look, sentiment makes geniuses. So many people in this business catch sentiment the ball and think that they actually have something to do with it. It's all about timing. I always use the analogy of the captain of a sailboat. He puts the sail up, the wind comes, and everyone pats him on the back for a great job. We need wind in the sector. We'll get it. It'll come back. It's very cyclical. And again, there will be many legs to this bull. But look, with Azincourt, for example, we're talking about that pure exploration play. And when I took over in 2017, I couldn't find a dime at the $20 spot. I hustled and bustled and did what we could to raise enough money. Suddenly, 2019, 20, and 2021, we raised almost $18 million for a pre-discovery drill. At one point, I mean, I was getting phone calls from the guys I was working with saying, I got another $1 million on the table. I mean, and we, it was just the right time at the right place. The sail went up and the wind was there. So I have every reason to believe that'll happen again. A lot of the juniors will be funded. I mean, listen, there's been some fundings this year that are strong. And I think we'll get back there. One of the issues we have, particularly with TISDALE, is our market cap. So if I had a 10 million market cap, I would have a lot of access to flow-through funds. And right now, they're not relaxing their criteria. In 2018, 2019, 2020, they started to. In 2021, they sure did. We raised a lot of money, and we hadn't drilled anything other than our market cap was at a point, and liquidity was at a point where the flow-through funds said, yes, we'll make some dollars available. I have spoken to the same funds about TISDALE. It was like, well, when your market cap creeps up, we'll be there. So, I mean, if I had a 20 million market cap and I was, hunting for unicorns, and it was flow-through eligible, they would give me the money to hunt for unicorns. They don't care if I'm ever going to find them. They want the tax right. So as good as this deal is in terms of less risk, because we're drilling into a deposit, we know there's mineralization and so forth, I can't get institutional money in yet. But I do believe we will be re-rated from a 3 million to maybe an 8 to 10 million market cap. And at that point, I should be able to access considerable amounts of flow-through funds to drill this project out of the place.
Okay, if I am an investor watching or a potential investor and I kind of, have you guys on my radar and I want to evaluate the company over the remainder of 2024, what does it look like? What am I watching out for in terms of what management's trying to accomplish, in terms of the work you guys are doing on the project and just any other potential goals or timelines? What am I looking out for?
Well, you know what? Everything we do is dependent on capital. So we have a little bit right now. We're actually doing a little raise right now, just a little midsummer raise. We're positioning some very strategic people for a larger raise that will happen sometime later in 2020. Our job is to drill out that deposit. At the same time, we want to step out of that deposit area and look for discovery elsewhere. I can get into the technicalities of that. Needless to say, it's a very fertile corridor that we're in. There's a lot of deposits in the area, a lot of production north of us, a lot of upside in the area. So, we want you to step out away from that deposit. But really, the goal for the next 12 months is to really spend most of the money we raise in the drilling out of it. When the environment's right, step out holes that can be shut out holes. We'll start to do that, but that is a development arc that we're on. Develop the known asset, which is that Fraser Lake's the uranium deposit, 7 million pound deposit. At the same time, expand that, get the grade up, but we also want to start to step out and look at some other areas on the project ground that we think right for additional discovery. As I mentioned, my lead geologist, named Trevor Perkins, made some big discoveries. In fact, he was the lead geologist on, led the team that made the McArthur River North discoveries, 110 million pound discovery. So he knows the area, he knows Saskatoon, he lives there, he knows Saskatchewan, he knows everybody and everything. And we are of the belief that this type of deposit should find other pods in the extreme vicinity. So, we're looking at that. We're hoping that that's where we go. But, over the next 12 months, we're going to drill, and we're going to continue to drill into mineralized holes. And we're going to earn our way into this deposit through Sky Harbor. It was really a great partner, great company. So, I mean, again, if we're on someone's radar, you have to ask yourself, is there another 3 million market cap that can guarantee mineralized holes that has that blue sky upside, like higher market cap greenfield plays? We have all of that, but we also have that baseline asset, which is that deposit, which I think is removes so much of the risk that explorers it's inherent to explorers.
Well, Alex, thanks very much for taking the time today to do this. I will be following your story, and I hope you'll keep coming back on here in the future to update us as the uranium bull market continues to go through its ebbs and flows. But in, I think, both of our views, we've got a bright future ahead for us, for any of the uranium investors who are watching.
I appreciate that, Steve. Yeah, I'd love to come back because I think we'll have some really interesting things to talk about over the next 12 months. 18 months. I think we've got a lot of runway in this space, and we're looking to do some exciting things. For a 3 million market cap, I think the growth's right in front of us. Thank you for having me. Appreciate being able to tell the story. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.